So you want to become a profitable trader. Well, fortunately for you, I've turned thousands of people into consistent winners, so I know exactly what you need to do. And in this video, I'm going to show you how to become a winner as well. We're going to look at what you're doing wrong, how to fix your problems, the right way to view and approach trading, and a simple 4-step process that you can use over the next 12 months to become a profitable trader. We're going to dive straight into it by starting out looking at what traders do wrong. And by far the biggest problem that I see among traders who are learning and aspiring to be successful is that they simply don't know what real trading looks like. And look, I don't blame you. You watch videos like this on social media, making outlandish claims, completely unsustainable or entirely made up ways of trading that simply don't happen and don't work in reality. And this is how you build your perception of trading, and you start to see trading as this crazy money flipping method where you can turn almost nothing into massive amounts of money. You watch people flexing lifestyles and making it look incredibly easy, and you follow what they say because you think they are successful. But I want to put it this way, there's a lot of money in teaching in any area. And I know there is in trading because I make a fair amount of money teaching myself. But these insane claims that mentors make on YouTube help the people that are making them to sell more programs. If someone tells you they can turn $100 into $1 million and they show you proof, well then you're going to buy their program because you think you'll be able to do the same. The more wild claims that someone makes, the more supercars and diamond watches they can buy, because the more people are going to give them $2,000, $5,000 or whatever it is to learn their secret strategy that's going to turn them into a millionaire. And because the people doing this are so caught up in the money and the lifestyle, they're so addicted to it, they give you these insane claims even if it's to your detriment, which it entirely is. It ruins your perception of trading from day one. It fills your mind with unrealistic, unattainable ideas that these people pretended they did themselves, and it messes you up from the very beginning. And I know some people are probably thinking, but it's real. You can flip $100 to $1 million because I saw it. The videos prove it's real. But let's put it this way, right? If we look at the mathematics, this is a 999,900% return. If you did this just 2 more times, which why wouldn't you if you can do it once, you would have $100 trillion. That's 1/10 of all the money, digital and physical, circulating in the entire world, and it will make you 300,000 times richer than Elon Musk. When you look at this math, you realize how obviously fake and made up this stuff is. And there's probably someone saying, oh, but liquidity issues mean you can't do it again. 100 to $1 million's okay, but anything past that and you run into liquidity issues. Look, if you want to live in that dream world, carry on. Just click off this video, go watch a video of someone driving around in a car and doing some shopping and pretend that you're doing some work. If you want to argue against the reality, then that is on you. But if you are ready to learn the real way to trade, then stick around. Now, not everyone is caught in this trap of social media, right? Even if you understand that all of that stupid marketing is complete bullshit, you still have a problem. And that is that you don't understand what it is that you need to do to win. Because you aren't sure what you should be doing, your focus is spent on the charts. You are married to the charts, trying to force setups to get some excitement, or just get into a trade and try and make some money for the day. This feels productive in the moment because you don't have clear direction as to what you should be doing instead. So you don't study properly, you don't operate with a real strategy, and you trade based purely on hope that your next trade will work out and you'll make a few dollars or a few $100s today. Realistically, whether you make that money today or not, it makes no difference 2 or 5 years down the line. You're still going to be in the same position if you spend all your time just taking active trades without every other important element. There is no method to the madness. So to put it bluntly, you're misguided and you're lost. But it's not your fault and it can be fixed. When you learn about the real way to trade, all of this falls into place. You'll realize that you've been wasting your time, but you'll have a clear set path as to what to do next. And that is what we're covering in this class. So now let's talk about what you need to do to stop losing. First things first, just stop watching those bullshit videos. If you're watching a video of someone doing some shopping, buying a bag, driving a car, whatever it might be, showing off watches, all this stuff, it's not trading, right? Think about it realistically. You're just watching a reality TV show. You're following someone's life. You're not actually learning to trade. You're not learning a skill. You're not furthering your abilities. You're not progressing in any way because you're not watching education. You're watching some lifestyle because it makes you feel good. It gives you a hit of dopamine and it feels motivating in the moment. But it's actually completely counterproductive. So stop watching all these stupid videos. Focus on these boring old educational videos like the ones I make instead. Yes, it's not as exciting, but at least it's going to give you some skills that you can go and further your career with. Number 2, stop trying to flip tiny accounts. Okay, you don't need to turn $100 into $1 million, nor will you actually achieve turning $100 into $1 million. What's going to happen instead is you're going to turn your $100 into a few hundred, maybe even a couple of thousand, then you're going to lose it all and you're going to have no money. So don't waste your time with this stuff. Number 3, you want to commit to doing the actual hard work that is required to become a winning trader. And what this hard work is, we will cover soon, okay? And exactly what this hard work is, we will cover soon in this video. And number 4, you want to stop chasing shortcuts. This holds everyone back, and it is the main reason why almost every single beginner fails and quits before they ever reach success. So what do I mean by shortcuts then? Well, we mean things like holy grail strategies, searching for this holy grail that's going to give you 90% win rates and make you win every trade, things like that. Number 2, trying to flip money for giant fast returns, so turning your tiny money into big money. Number 3, investment schemes, copy trading, and number 4, signals. So let's break down each one of these, why they're bad, and why you need to eliminate this from your focus when you're trying to learn to trade. Number 1 then, the holy grail strategy. There isn't a magic pill. Trading is not about holy grails. There's no strategy that's going to make you win every trade, and searching for it is a fruitless endeavor. The real holy grail in trading is getting your perception right, like you are right now, and understanding that you only need to win 40 to 50% of the trades you take with a positive return on the winners that you take. That understanding of the probabilities actually becomes the holy grail, but it's not some special strategy that's going to make you win all the time. The holy grail forms inside of your mind and will be fully developed by the end of this class. So searching for the holy grail strategy is a complete waste of time and money. You're not going to find it. It's nowhere out there to be found. So flipping accounts. Now, as I said, this is unsustainable. Don't believe for a minute that someone turned $100 into $1 million. Yes, you could turn 10 into 1,000. Yes, you could turn 100 into 10,000 if you get lucky enough. But the problem here is, and the reason that you can't scale that same result all the way to $1 million and beyond, is because it's completely unsustainable, right? To do these kind of numbers, in order to turn a tiny amount into a very large amount, you have to be trading with massively exacerbated risk and leverage, which means you are basically 1 or at most 2 trades away from losing all of the money in your account. So for example, one time in 1 hour, I turned $100 into just over $1,000. But guess what happened the next day? I lost it all because I was over leveraged. And as soon as you inevitably hit 1 or 2 losing trades, all the money's gone. It doesn't matter if you made $1,000 yesterday if you've now got no money left. It's all gone, including the principal. It is a complete waste of time and money. Investment schemes. Don't get me started on investment schemes. People saying they will triple your money in 3 days with 100% guarantee, stuff like this. Only beginners fall for this, but it's all complete bullshit. Investment schemes are 99.999% of the time complete scams. You will literally just get robbed, making it a complete waste of time and money. So I want to just quickly explain how these work. Here's a channel with my name and my picture, and this person is offering cryptocurrency investments, whatever they may be. They're pretending to be me. Basically then my audience trusts me, so they go into this group, they think this is me, they give money to this person thinking they're going to get some crazy returns. Doesn't happen, they get robbed. So if you're trying to shortcut by going for investments that are going to double or triple your money with 100% guarantee, it's all a lie. It's all a scam. They're impersonators that do this. They do it for pretty much everyone with a following in the trading space. Don't fall for this stuff, okay? Investment schemes, they're all scams. Copy trading is often the same. And even if you do find a legit copy trading platform, you're going to spend more time and money than it actually returns, which means it's a waste of time and money. It's also going to kill your focus and attention and draw you away from learning for yourself. So don't do this. And signals, I hate signals. It's near impossible to win with them. Most people selling them suck at trading altogether, and even if the person offering the signals is profitable, you won't be because of variables. Imagine they take 2 losing trades and 1 winning trade, and that 1 winning trade wins way more than the losses and is a profitable week. But what if you're asleep when the profitable trade goes out? What if you're in a meeting at work? You've missed it. Now you've got 2 losses, whereas they're having a profitable week, you're losing. So variables make signals incredibly difficult to win with long term. It's pretty much gambling at that point. And once again, they draw away your focus and create dependency on the trader that is providing them to you. So don't waste your time with these. As you can see, all of those shortcuts have one thing in common, and that is that they are all a waste of time and money. Don't put your focus into these, go the hard route instead. They burn your trading accounts to the ground, they steal all of your focus and attention, and they get you locked in what I call the cycle of doom. So here's how it goes. You find a new shortcut. You found a new signal provider, a new investment scheme, a new strategy on YouTube. You're all excited. You think it's going to be great. You think you're going to make a lot of money doing this. This is your key to successful trading. You waste a bunch of time on it. Maybe a few weeks, maybe a few months. You put time, energy, focus, money into this, and then you start to realize this is not going to work. you lose all the money, all the time's gone, you're not getting it back. And then you give up eventually and you fall back to step one, where you find a new shortcut which you think is going to solve the problems that you've faced so far. This is where you're living right now, and this is why trading feels so frustrating and impossible. So think of it like this. How many times have you joined a new signal group, watched a new mentor on YouTube, tried a different strategy, bought a new course, but you're still not profitable? That's because you're stuck in this cycle where you jump from something to something new, it doesn't work, and then you jump around again. And you just continue going around in this hamster wheel of losses, financial losses, time losses, and create massive frustration and stress for yourself. If you want to win and really get serious with trading, you need to put an end to all of the time-consuming, money-burning nonsense that you've been stuck on for however many months or years it is that you've been trading. And it starts with shaping your perception. So what if I told you that you don't need huge 50% winning months? You don't need to flip accounts all the time. You don't need any of these crazy shortcuts to win. In fact, all you actually need to win in trading, and this is going to shock you, is a strategy that will consistently provide 2 to 5% per month to you. Now, more's better, of course, 5% to 7%, 8%, 9%, 10%, whatever. But if you could make 2% per month, now, most people could do that, right? If you had the right system to allow it, you can make thousands, tens of thousands of dollars per year from your trading. And I know you probably think 2 to 5% is insanely low because of what you've been taught online. But let's put it this way. It's not. 90% of traders make nothing, which means you are in the top 10% simply by making even 1% or 0.5% per month. If you take a look at what some of the greatest traders in history have said throughout books like Market Wizards and interviews, these guys make between 2 to 5% per month. Generally, never any more. Now, yes, they are trading with larger capital, they're trading in risk-averse ways, but why can't you trade large capital? Why can't you trade in risk-averse ways as well? Because 2 to 5%, if you have an account size of $200,000, is $4,000 to $10,000 per month. That's upwards of $50,000 to more than $100,000 a year from your trading with what you might see as measly returns. But these small, consistent percentage returns turn into large quantities of money directly in your pocket. I know you might think, I don't have $200,000. How am I going to trade with that? But capital comes easy nowadays. And it comes as a byproduct of successfully applying a good trading system. If you've got a system that performs well and you apply it well, so you're trading well, capital will come to you. We have companies called prop firms nowadays. They'll give you $100,000 to $1 million to trade with, and you get to keep 70 to 90% of the profits you make. All you have to do is prove that you are consistently profitable. And if you have a good system, this will happen as a byproduct. So even if you've only got $300 to your name today, there's no reason that you couldn't be trading $100,000 next year. And I don't want to bore you with this, but just to show you that it's actually possible, here's just a bunch of traders that I've taught who are doing some pretty crazy numbers, $10,000 per month or more with funded capital. And this all comes just as a byproduct of building and applying a good trading system. That's a hell of a lot of money to come in from trading without any of these stupid shortcuts or account flips or signals or anything of the like. So what I'm about to show you is going to change the game for you as a trader. I'm going to take you deep into how successful trading looks. So what we have here is pretty much the blueprint of becoming a profitable trader. We take the very base elements like technical analysis, risk management, and mindset and psychology, and turn these into something that will create lasting success. I'm going to take you through this from start to finish so that you can see how we build upon each point. So even as a complete beginner in trading, it's likely that you've heard the terms technical analysis, risk management, and mindset. Technical analysis refers to anything related to charts. This is what most people are interested in. It's probably the most enjoyable and exciting part of the trading journey. Risk management refers pretty much to money, how we handle our money, and how we balance the profits and losses from the wins and losses that we take. And mindset and psychology refers to pretty much anything mental or emotional focused, right? Now, these are generally covered on a very surface level way. When you look at videos on YouTube or free courses like Baby Pips, they say, manage your risk, keep your mindset in check, but they don't really talk about how, right? And if we want to succeed, we do need to go a little bit deeper. So starting with technical analysis, if we jump into this, you can see that we have basically subtopics inside of the larger topic. So I've covered things like top-down analysis. It's just a way of collecting more information. So this is a trading style where you would use high time frame, then medium time frame, then low time frame, like using the daily into the 4 hour and then into the 1 hour to find trades. as you can see, this gives you more information than simply trading one time frame. So incorporating things like this into your trading is one of the big steps towards collecting more info, doing better analysis, and winning more trades. Now, the second thing I covered here is technical concepts. Basically, I believe you can win at trading with pretty much any approach, right? You could even win with a indicator combo strategy if you tried hard enough. Although I don't think it matters what technical concepts you trade with, I do think you need to be clear with the elements that you are indeed going to trade. If you're going to trade support and resistance, then trade it. If you're going to trade supply and demand, then trade it. If you're going to trade trend lines or indicators, then just trade it. What you can't be doing is trading support and resistance today and then supply and demand tomorrow, because that shows that you clearly have no system. And what you're doing is pretty much just gambling into each setup. Remember before I said you're trading on hope? Well, that is exactly what happens when you're mismatching these concepts, right? If one day you've got a trend line setup, the next day you've got a supply and demand or SMC setup, basically your problem is that you are unorganized and unsystemized. And that means you can't make your trading repeatable. If you can't make your trading repeatable, well, then we can't bring all of these elements and turn them into this, right? Which is what we need to do in order to succeed. So whatever technical concepts it is that you're going to trade, just make sure you stick to it consistently. And then the final thing I wanted to cover here is trade management. This is pretty much how you nurture a trade when you are in it. So we need to think about things like take profits, where they're going to go, and stop losses, and what you're going to do with these as well. Because maybe in your system, you could move your stop loss to break even when a trade is running in profit. That might be a profitable thing for you to do if you tested it over the long term. But a lot of people don't even consider this stuff, right? The management, because it's not as exciting. We just want to get into trades, right? That's the exciting part. But really, the money is made in actually looking after the trade when we've taken it. So trade management is actually incredibly important. Now, as I've just covered, you can see that when we go through these different ways of improving our trading, the main goal is to make it repeatable and turn it into a system, right? We want to make sure that we are following the same rules pretty much for every single trade we take, right? There could be slight deviations in analysis, but it's always going to be the same concepts. We're always going to make sure to get the most information that we can, and we're always going to make sure that we have a solid management process. So when we get into a trade, we can get out of it profitably in the future when that time comes. And we pretty much have the same goal when we move on to risk management. We want to systemize things here. So the first thing to cover is risk to reward. If you don't know what this is the best way to trade for long-term success, in my opinion. So risk to reward is classed as a ratio. So your risk to reward here, for example, would be this 1 to 3. This means our risk is 1, our reward is 3, which basically means every time we risk $1, we are trying to return $3 if the trade wins. This allows us to win even if we only win half the trades we take, right? So that means we can be wrong half the time and we can still make a considerable amount of money. Let me show you an example. If we had a 1 to 3 risk reward ratio and we won only 40% of the trades that we took. So 40% win rate, 1 to 3. Let's say we take 100 trades. 60 lose, 40 win. On the 60 that we lose, we are going to lose 60%. So now we have minus 60%. But on the 40 that we win, because we've got a 1 to 3 going on, we're actually going to win 120%, right? So we have 40 times 3 and then 60 times 1. So now we have 120% minus 60%, which is going to generate an overall return of 60% over 100 trades, which means average of 0.6% profit per trade, right? Which means every time we take a trade, we are basically making 0.6%, whether it wins or whether it loses, right? This averages out to create this 0.6% profit per trade, which is an awesome thing to know, because if you can just consistently do this, well, now you don't even have to be right half of the time, right? You can be right only 40% of the time, and you're still going to make 60% every time you take 100 trades. Let's say you take 100 trades over the span of a year. That's a 60% return over the year, which is around 5% per month. A very healthy profit and something to be very happy with. So you can see the next thing I noted on the risk management section is just an understanding of the probabilities. I've just showed you those probabilities, so it's just a consideration of this. The other thing to consider is that you can remove your ego from trading. Now, this also kind of directly correlates into some of the mindset-based stuff. Basically, you don't need to be worried about being right and stroking your ego if you know you can win even when you're wrong, okay? So just understanding these, it's going to be related to the risk reward, the win rates, and then of course, ego related things, as we've just said, right? Get these things right and you will do a lot better. And as I say, this does pretty much link into psychology as well. Now, the final note I've got from risk management is risk per trade. So we want to make sure we are risking the same amount on every trade we take. I like 1%. You could do, at the very highest push, 2%. But you could also do, and I quite like this one as well, say you've got a funded account, 0.5%. That's going to keep your capital safe. Now, the main rule with your risk per trade is just to make sure, regardless of what you choose, you keep it the same, right? Because let's say we go back to that 40% win rate example, but we were mismatching our lot sizes, right? We have 60% of losses, but let's say they were all at 2%. Well, that would be minus 120%, right? If we also had 2% on the 40% of winners, so we were making 6% per trade, well, now we would actually make 240% across 40% of winners. But let's say the 40% was actually at 1% risk. Say we got unlucky. All of our losses were the big size ones. All of our wins were just 1% wins. Well, now we've got 1% times 3, so we have 120 here. So we've basically got 40 trades out of 100 times 3, because they are 1 to 3 trades. We have 120% return. But we have 60 losses at 2%. So we have 120% loss. So now we've done an entire year of trading and we make 0%. Obviously not great, right? So this is why you need to keep the risk per trade the same. Either choose the 1% or choose the 2% or choose the 0.5%, but don't go on a case-by-case basis. Your risk per trade must remain the same for every single trade that you take, okay? So what we've just covered here has once again turned into a system. So now we've got a system for our technical analysis. We have a system for our risk to reward. And we'll just briefly cover mindset and psychology. This is going to cover things like understanding that probability and ego, also just remaining patient and waiting for trades that are good, staying disciplined enough to follow these systems that you've created here for risk control and of course for technicals. And then keeping a long-term focus is just about keeping your eyes on the bigger picture, right? We want to make sure we are looking over a 2, 3, 4, 5 year span, not just looking at making a couple $100 today, because that is not going to help us in the long term. So everything that I've just showed you comes together to create a system. This is a repeatable plan that will cover a bunch of different aspects. We've got here mental factors, our risk control systems, our analysis process, the entry criteria we use to get into trades, the trade management process, the backtesting process, the journaling process, the capital management process. So obviously we know what these are, what these are, what these are, what these are, and what these are. But we've also got some extra elements. This is how we validate our trading. This is going to become very relevant soon when I get into that 4-step process. The journaling process is how we improve. So backtesting is where we trade in a simulation, right? We use a software that will allow us to test our systems out in real time using past price data. There is no risk here, but we can collect a lot of information and also build our trading experience as well. Even though we're not trading live, we get to look at hundreds of different hours and days worth of chart price action to understand how the market moves. Journaling is where we track the trades that we take and then we review them. And when we review the trades that we've taken in the past, we get to see areas of improvement. We get to see areas where there will be lots of losses, right? And then we can try and eliminate the reasons for the losses. Now this all together will create your base trading success, but we need to create lasting success. So pretty much everything that we've covered in this area is going to be crossed over and continued onwards. So we will continue to do backtesting. We will continue to do our journal reviews to make incremental improvements. We will make sure that any money we make, we are making smart use of it. So we are going to try and scale this capital. We're going to save and we're going to invest this capital to make sure that aside from trading, we have some money, some wealth, right? You don't just want to gamble it all in trading. It's one way to make money of many. There are better ways to preserve wealth. And this is where that smart use of capital is going to come in. Obviously, I also believe you should continue studying. You don't have to continue studying other people's work when you're profitable. I don't do that now, but I do study my own work. I do study my own charts, my own backtesting, my own results, anything that I can to give me a further edge or reverse engineer things in the markets to try and understand how things are changing and how we can continue to improve based on study. And then the final thing is just accountability. So be real with yourself and stay focused. Okay, that's pretty much it. And if you do all of these things, you are going to create that lasting success that we've talked about. So following on from that blueprint that we've covered, you're probably now starting to see the key to successful trading is through systemization, allowing your strategies and systems to do the heavy lifting for you to balance the profits and losses that you are inevitably going to take. An understanding of the importance of trading systems and strategies, along with an understanding of the math behind successful trading, is exactly what you need to start making massive strides in the right direction towards your progression. And now, that 4-step process that I talked to you about at the start of this video, it is a process that you can follow over the next 12 months, which is designed to take you from where you are as a stuck losing trader all the way through to thriving with hundreds of thousands of dollars in funding with the potential to make thousands or tens of thousands of dollars per month in profit, as I've already showed you. But there's one problem. I was going to show you this 4-step process today, but I haven't even given you a trading plan. And for many of you, this will be the first place that you've learned about the importance of trading under a system, strategy, or plan. So giving you this 4-step process without giving you a trading plan doesn't make too much sense to me. Now, in 2 days, on the 25th of November, I'm going to be dropping another class, teaching you all about trading plans. We're going to go through a trading plan together. We're going to backtest this trading plan together. And while it will be a very simple plan, it'll be a profitable one. And it'll be something that you can use to build the foundation of a successful trading system, building off of everything that we've covered so far. And once I've given you a trading plan to start working with, then we can run through the 4-step process. So in the meantime, join my Telegram channel using the link in the description. There you're going to get some extra lessons while we wait for the next class, and you'll also be the first to know when it does drop. So with that said and done, I'll see you on the 25th.